Welcome to our analysis of a truly historic moment on Wall Street. The S&P 500 and Nasdaq have just closed out a landmark month, hitting fresh intraday records. Today, we're diving deep into the powerful catalysts fueling this massive breakout, focusing on two unexpected global forces, a potential US-Iran truce and collapsing crude oil prices. The headlines speak for themselves. Both the S&P 500 and the tech-heavy Nasdaq have soared to record territory, marking an emphatic close to an otherwise volatile trading month. So what are the primary engines behind this remarkable surge? We'll break down how geopolitical shifts and a dramatic commodity price movement are providing a powerful tailwind for stocks. To truly appreciate this breakout, we need to frame it within the month's broader market narrative. This month started with significant uncertainty. We saw high volatility driven by persistent inflation concerns and mixed earnings reports, but the final weeks turned everything around. Visually, the shift is stunning. What started as hesitation quickly became a decisive rally, with buying momentum accelerating as the month drew to a close. Let's pivot to the first major catalyst, the whispers of geopolitical de-escalation. Reports of a potential, albeit fragile, truce between the US and Iran have been highly supportive. Any step towards stability removes significant geopolitical risk from global markets. The removal of this risk premium allows investors to re-engage with assets, shifting capital from safe havens back into equities, particularly high-growth tech stocks. Now, let's examine the second powerful and perhaps more immediate driver, the crash in crude oil prices. Crude oil prices have seen a dramatic, sharp decline this month. This collapse is a direct result of increased supply expectations, partly tied to the truce talks, and concerns over global demand slowing down. For the broader economy, lower energy costs act as a massive tailwind. It reduces inflation pressure, boosts corporate profit margins across various sectors, and gives consumers more spending power. These two factors, when combined, create a synergy that is hard for markets to ignore. The prospect of geopolitical stability paired with lower input costs from cheaper oil creates a, quote, Goldilocks environment, not too hot with war risk and not too cold with recession fears. Crucially, the drop in oil prices significantly eases inflation concerns. This reduces the pressure on central banks to aggressively raise interest rates, which is bullish for both the S&P 500 and the Nasdaq. While the breakout is strong, we must be mindful of potential roadblocks ahead. The key risks remain inflation data and any reversal in the geopolitical truce. Any unexpected jump in oil prices or renewed tensions could quickly temper this rally. Investors should keep a close eye on next month's earnings reports for confirmation of corporate margin expansion, and of course, monitor every statement from the Federal Reserve regarding interest rate policy. In summary, this month has proven that macro events still hold immense sway over market direction. The S&P 500 and Nasdaq's record close is a clear signal that the market is reacting positively to easing geopolitical fears and the deflationary effects of cheap crude oil. This momentum suggests a strong foundation for the coming quarter, provided these positive catalysts remain in place. Thank you for tuning in to our market breakdown.